Good afternoon, everybody. Hope you've all been well. Thank you so much for tuning in to today's webinar series that is all about self-employed clients and understanding the 5 ways that we can verify and validate your client's self-employed income across residential, commercial and SMSF. To make sure that you're across all of the options leading up to obviously the end of the financial year. There's a lot of clients out there who definitely aren't ready to lodge a tax return, but want to use all of their income from the most recent 6 to 12 months. So we're going to take you through all those options today. So you're equipped with having those solutions up your sleeve and in your toolkit to be able to provide better solutions to your clients. So my name is Samantha Hanson. I'm the National Manager here at Pepper Money for Sales and Broker Support. And I'm joined by Andrew Miller, our Commercial Credit Manager. Hi, Andrew.
Hey, Samantha.
I'll throw to Andrew. You want to give us a bit of an intro on yourself?
Sure. Yeah. So I lead the commercial credit team here at Pepper, doing all things commercial property, self-managed super fund, and help out with some of the more complex residential applications as well.
Beautiful. And I absolutely love, I think there's not been a deal that I haven't thrown at you that you've declined yet. So that's really good. We have the right person on the call today.
Always trying to find the right solution.
Absolutely. Where there's a will, there's a way. We do have a Q&A. If this is your first time with us in a webinar series, we have a Q&A. We have one of our senior BDMs, Tony Wakim, in the chat forum today. They're answering your questions live. If we don't get to your question in time today, because sometimes we do get inundated with questions, and you do want us to be able to answer it offline, you won't be able to be anonymous asking that question. Please make sure you have your name there so we can come back to you after today's session if we don't get time to get back to all of you. There will also be a survey at the end of today's session, so please do action the survey. It does give us better ways that we can service and provide support to you and your clients as well. All right, so let's kick it off. Okay, so as you can see here by this graph here, from 2013 all the way up to a couple of years ago, the increase in the number of small businesses within Australia is exponential. It's grown so rapidly. And it does give us, obviously, an indication that there's a lot of opportunity out there in market for you, and hence why we're bringing all of the solutions that we have for self-employed clients to you today so that we can make sure you're across all the solutions that we have on offer to you. We have made some very exciting changes and enhancements in the smart tech space. And I'm going to throw to Andrew, who is going to run through these smart technology changes, which are making it a lot more easier for you to do business with us. Over to you, Andrew.
Yeah, thanks, Samantha. Just running across the screen there, we have some of the innovations that have been released or soon to come. Obviously, having your valuation, a desktop up front, will give us a really good idea of what we're looking at in terms of the property and being able to size up our LVRs and so on. So the AVMs, EVRs are available up front. And then I find this one very exciting, digital alt doc forms. So we're doing away the old paper-based alt doc forms for self-employed declarations and accountants' income declarations and going digital. Further soon to come, they will be electronically verified as well. So what that means is we'll be able to make everything nice and simple for everybody, speed things up, not only at the front end, making it easy for brokers, self-employed applicants and their accountants, but when it comes through to my credit team, they won't need to make phone calls, play a bit of phone tag, chasing people up to do our scripted verification of those documents. Will already be electronically verified, so be able to speed up that approval process as well as the application process. Digital app submission. I mean, we do live in modern digital age, so that just makes sense. Why wouldn't we have digital app submissions? Digital ID verification, again, big advancements. We're actually looking at a single ID verification as part of that as well, so watch this space. And again, massive enhancements to our process. We've had digital docs, e-signing in Resi. It's now been extended to our CRE or commercial real estate lending and self-managed super funds. And that's a massive enhancement. I believe we're first to go to market in the self-managed super fund space for eDocs, and we've tested it. It's been in place for a couple of weeks now, and the record so far, we can actually issue a set of docs, get them electronically executed and returned to our settlements team in 9 minutes. That's our record so far. The record's there to be broken as well.
That's so exciting. Such a time saver, all of these enhancements.
Can I just add too, before we move on, it also removes error rates because the e-signing process directs the individuals to where they need to sign and date and witness. So we're no longer sending docs back missing a spot or executing the wrong spot. So not just that speed, but the accuracy that then leads to speed as well.
Yeah, okay. So with the upfront ABMs and EBRs as well, we do have some training that will be coming out. There'll be a webinar that's going to be run by our operations manager. That'll be coming in July. So watch out for the invite for that. It'll give you everything that you need to know around our new smart vals. I won't go into any more detail on that, but stay tuned for that. And I'll also be running a session with FMS and Galilee all around the digital alt doc piece, digital ID verification, loan doc e-signing, giving a really in-depth education and awareness in terms of how to navigate those processes and be across all of these smart tech options that are going to save you lots of time. Okay, so why are our brokers bringing their self-employed clients to Pepper Money? So some of your common loan purposes here are refinances and unlimited debt consolidation. Now, in terms of unlimited debt consolidation, we can do that across our entire residential and commercial product offering now. So we used to be capped or limited to up to 4 debts in Prime, but now it's unlimited. With the Prime product, it is still for personal purposes only, so no business or tax debt in that Prime product. But you can absolutely do an unlimited amount of debt consolidation in there now, which is amazing. So you can purchase property or commercial space. We can pay out business debts and private loans, ATO tax debt, cash out for business purpose, which is awesome. And then some policies that we have here that are bespoke and a little bit different to your major banks is we can do 40-year loan terms across every product in the residential offering now. So even 40 years on Prime. We have got credit impairment options. So in our residential offering, near Prime Clear, near Prime Specialist and Specialist Plus. And then also in commercial, we have the near Prime offering for commercial and also a near Prime offering for SMSF as well. Now, there has been some recent alignment with residential policy in the near Prime product to our commercial product. So we now allow defaults up to $3,000 registered at any given time frame in our near Prime commercial offering. That used to be limited to $1,000. And we can now accept 1-day discharge from bankruptcy in our commercial near Prime offering as well. That used to be 2 years. So now that's completely aligned with residential, which is very exciting because there's a lot more opportunities for you in the commercial space. Alternative income verification, we're going to run through that today for you in detail. Specialised commercial and mixed security types. So we did run a specialised security commercial webinar early last month. I'm running another one of those next month, more than likely with Andrew. So you'll be able to get across that. If you did have a scenario you wanted to understand that right now, you can absolutely reach out to your BDM or your RM and request a copy of that recording so you can get up to speed on that as well. And then short-term ABNs for home loans. So we will run through that again. We'll run through that for you today. Andrew, I've got a couple of questions for you on this slide here.
Excellent.
So the first is private loans. Can you talk to me, where does that sit in the commercial piece? And then also, where does that sit in the residential offering in terms of our Prime and our near Prime Clear product?
Yeah, sure. So we absolutely have an appetite to refinance private loans in both consumer and commercial. We just need to distinguish between private loans that have a formal loan structure or one that, say, has no repayments or is interest capitalising. If there's a formal structure and we can get a hold of some statements and review that, then we can write as a prime loan in both the residential and the commercial space. Where it is just capitalising, there's no formal repayments, that's when we look at a near prime product.
Perfect. Okay, excellent. And just to reiterate that the prime product is for personal purposes only. So we understand that most private loans are in a commercial name or entity, but what we need to confirm is that the purpose of the debt was used for personal purposes if it is to go into the prime product. If it is found that it was used for business purposes, then again it would cascade down to that near prime clear product, where we cater for business purposes. That's in the residential front. ATO debt. So this is definitely trending at the moment. Can you talk us through the changes that are coming about on the 1st of July with ATO tax debt?
Yeah, sure can. Look, I'll just preface it by saying this is not tax advice, and businesses, individuals need to obtain their own tax advice. Having said that, the thing that's front of everybody's mind is the ATO has made it known that the interest that's accrued on the ATO debts will no longer be claimable as an interest deduction or an expense on financials for next financial year moving forward. So that's treated a lot of businesses and business owners to think about how they're managing their tax debts. We certainly have an appetite to support those businesses that have tax debts. We can do that by refinancing that tax debt and taking it on and clearing it for them, which will then become, again, subject to the right advice, an interest deduction moving forward. And we can still support businesses that choose to manage their own tax debts outside of refinancing it with us via an arrangement and so on. There will be different product selections depending on whether we were refinancing the ATO debt or not, subject to the individuals and businesses having otherwise clean credit histories. We can write in on the consumer side of things, in resi lending, we would have a near prime product if we're paying out the tax debt, that is. If they're retaining the tax debt, managing themselves, near prime clear or other relative products. And on the commercial space, if we are paying out the tax debt, it could be qualify for a prime product, all else being acceptable. If they're managing that tax debt themselves where we're not paying it out, that would then be a near prime commercial product.
Perfect. So we have solutions across the board, whether it's resi or commercial, to pay out that tax debt. And obviously the rates are a lot lower than 13.1%. So definitely a good opportunity to speak to your clients to find a better solution for them. What else did I want to know here? So cash out for business purpose. When we're looking at verification requirements, obviously for us, we can do unlimited business use cash out or personal purposes cash out. What do we need to avoid providing verification to support that cash out?
We just want to understand what the cash is being used for. So up to 100,000, we're generally accepting of the cash out. Above 100,000, we just want to satisfy ourselves that we're not placing the client in an untoward position or Pepper in that sort of position as well. As long as we're satisfied with that, that the cash out is actually for purpose going to benefit the client, then we're okay to proceed with that.
So I think I had one recently actually that so we had a client who wanted to do a refinance and cash out $600,000 and they didn't have any verification. The purpose of the cash out was to purchase an investment property and they wanted to purchase it outright. Now, we didn't actually need to get a contract of sale for that client and that cash out. And the reason for that is the cash out suited the borrower's profile. So they had 3 investment properties already. They weren't all highly geared. They all sat around that 80% LVR. They had an owner-occupied property as well. And so providing that level of cash out made sense to that client and that profile. And we were satisfied with mitigating that risk given the fact that they were managing those assets.
I recall that application.
Yeah,
it was very clear.
It was
a well-written application where we could tell what the broker put forward. They were a sophisticated investor to start with. So that profile certainly matched.
Absolutely. So if you've got cash out for investment purposes, I think the most common request we get is it's just investment purposes. We need to understand what those investments are so that we can delve into, well, is this client well versed in that investment? Do they know how to manage that investment? Because that is the risk for us, is that they don't know how to manage it. And obviously there's always a risk to investing. Okay, so moving on. 5 forms of income verification. So this is for your residential and your commercial. We also have options for self-managed super funds. I won't delve too much. I'll do a high level of that explanation today, but we do have an SMSF webinar next week, actually. Next Tuesday. So if you haven't registered for that one, jump on board that, because we'll go into that in very great detail. Plus, also go through some different servicing options where your client may not be able to service the SMSF debt within the SMSF alone. So lots and lots of options for SMSF as well. So we'll go through that next week. What we have here, though, is full doc and alt doc options, residential and commercial. So we have just recently made a policy change as well in the commercial space where we accept financials as well as tax returns. So we can do 2 years financials in both prime, resi and commercial, or we can do 2 years tax returns and NOAs and ITRs. So you've got the option of doing one or the other. And then you've also got a 1 year option. So in our near prime clear product in the residential offering, we offer that 1 year financials or 1 year tax return offering. In the commercial space, we have in the near prime offering the 1 year tax return or financials offering as well. Now, in the residential offering, we have a prime, near prime clear, near prime, and a specialist and specialist plus products. Lots of products in the resi space. The only product you can do your 1 year financials or 1 year tax return on is that near prime clear product. We're going to go into greater detail on that product in a moment. In terms of your alt doc offering, we have 3 ways that you can verify your client's self-employed income using alternative documentation methods, and that is business bank statements, BAS statements, or an accountant's letter. We are going to run through in greater detail how we look at that income, how we analyse it, how we calculate it, and where it goes in that self-employed into the serviceability calculator as well. Now, I will run through, though, with you now the ABN lengths. So in commercial, there is only a 24-month ABN option and 12 months GST for the prime and the near prime. Is that correct?
Yes.
Yeah.
Yes.
In the residential offering, we have a 24-month ABN and 12 months GST option available for prime and near prime clear, both full doc and alt doc, and our near prime full doc. Near prime alt doc, we can do a 12-month ABN for clear credit clients. And then in the specialist alt doc product, we can do a 6-month ABN for clear credit clients. So we have a 24-month ABN, 12-month ABN, and 6-month ABN option for clear credit clients who may have the short-term ABN requirement. So let's unpack full doc versus alt doc here so you can understand what your options are. So the benefits of financial statements. So with our financial statements, as mentioned, you have the option of providing just 1 year. Now, I think the biggest issue that we see with people that want to use the 1 year financials is they provide us the 2 years on the document, and they don't get it. They don't get one of the year. They don't get the oldest year redacted. So if you're wanting to use the 1 year financials, make sure you're only giving us 1 year on that document, because if we see 2 years, we can't unsee what we've seen, unfortunately, as much as we'd love to. So 1 year, definitely. Obviously, the banks are always looking for the 2 year tax returns, financial statements, and notice of assessment. So when we're looking at just the financial statements, we mean just the financial statements. We don't want to see the notice of assessment, and we don't want to see the individual tax returns. Now, with the financials option as well, and this is really relevant to coming up to the end of the financial year and clients who want to rely on the last year's worth of income, but they don't have time, or their accountant doesn't have time, or for whatever reason they don't want to lodge that tax return for us. They actually don't need to. We can rely solely on the financials. As long as they're not in draft format, they must be completed. They must be signed by the accountant. And they must not be draft, as I said. We can solely rely on those financial statements. And that is a full doc. That's not an alt doc loan for us. That's a full doc loan. Now, 1 year is the near prime clear product. So if you've got somebody who wants to use just the most recent financial year in isolation and they haven't lodged their tax returns, we can do that as a full doc loan up to a 95% lend. If you've got somebody who hasn't lodged their last 2 years' tax returns and they want to rely on the last 2 years' financials, then they can look at that in a prime product up to 95% as well as a full doc. So lots of options there, obviously. In terms of your 1 year financials on a near prime clear product, this product has so many different niches built into it. It is probably, I would say, our most diverse product. You can do personal purposes, business purposes. We even accept some diverse credit in this product as well. So you've got defaults up to $1,000 are accepted. You can have an unlimited amount of defaults up to $1,000 each. For us, they don't need to be paid either. They can remain unpaid. We accept late payments on unsecured debts as well. So if you've got somebody who has ones on their repayment history information, you'll have on the comprehensive credit report, you'll have the last 2 years worth of information and repayments. We only look at the last 3 months for unsecured debts. So if they haven't exceeded the number 1, then we can actually still accept them in the near prime clear product. They could have one each month, 3 months in a row. So it doesn't matter how many ones they have as long as they don't get to a 2. Unlimited cash out. So as I said, in this product, we can do personal and business purposes as well. So unlimited cash out for business use. As Andrew was alluding to before, we can pay out ATO tax debt in this product as well. And then you've got the 40-year loan term option. We can pay out private debts that have had the capitalised interest with no repayment history. They can be business purposes as well. We pay out solicitors' loans, caveats. And in terms of some of your servicing niches in this product as well, you've got 1% serviceability buffer is actually available in the near prime clear product as well as company debts are excluded from the serviceability. And we also have no notional rent as well for those investors that may not be paying rent. In terms of no notional rent, all we need is a letter from mum and dad or whoever they're residing with to state that they're not paying rent, and it must be signed and dated. So that's the verification we need for that niche. In terms of your 1% buffer, you have 3 scenario types where we can use the 1% buffer. And the 1% buffer is acceptable in our residential offering only, in our prime and our near prime clear products. It's not available in construction. And the 3 scenario types, you can use your 1% serviceability buffer for investment purchases up to 80% lend. Also refinances with unlimited debt consolidation and also up to $20,000 cash out. Again, capped at an 80% LVR. And then also for any fixed rate loan. Now, with our fixed rate loans, there's a new rate card that was released last week. We have no loading on any of our fixed rate options. So essentially you lock in whatever the carded variable rate is at the time for one year, 2 year, 5 years, 10 years, whatever the situation might be. And there's no break costs for us either. The reason I'm highlighting the fixed rate option is because there is no specific scenario type for owner-op purchases to use the 1% buffer. So we've got an investment purpose option to use the 1% buffer. We've got a refi and debt consolidation option to use a 1% buffer. And then it's any fixed rate loan. So if you have a client who would like to purchase an owner-op and take advantage of the 1% serviceability buffer, you just have to make sure you request for that loan to be fixed. As mentioned, there is no loading on that rate and there's no break costs. Now, serviceability and packaging with financial statements. So The assessment of income is completed in the same way as if you were providing company and personal tax returns. You can still add back the depreciation. You can still add back one-off expenses when verified by the accountant. We can use the director wages and salaries, and company debts are still excluded in the servicing when the company is trading profitably. So I'm going to show you here in terms of what we're actually using from the financial statements and where that goes into the serviceability calculator. Now, it's important to note, if you are using just the 1-year financial statements, you must duplicate years 1 and 2 in the serviceability calculator. Otherwise, it's going to take the average, which is going to halve your income. So make sure you're duplicating it. And the figures we're taking here from the financials is simply the total income, which gets transposed into the gross business income field on the serviceability calculator. The total expenses, again, go into the expenses field. The depreciation, the director's wages, applicant's entitlement. It's really important not to forget to put the entitlement. If you don't allocate a percentage, whether it's 100% because they're a 100% director shareholder or they're a 50% director shareholder, if you don't put a figure in there, it won't give you any income. Okay, so that's really important. Now, I might just throw to you, Andrew, in terms of the director's wages, can you talk me through, is there anything we need to know around the director's wages and also verification of that?
Yeah, no problem. You can see in the example given their wages, and we've just highlighted there's one director here. So obviously the wages are going to relate to that one director. We'd call an accountant and just check on that. If they've got employees that are included in there, we just need to extract out what the actual director's wages are. You may even find they're listed separately as director's fees or some other entry on the P&L. So it comes down to how the accountant has actually made that entry on the financials. We just want to talk to the accountant and make sure we're using the right number. And it will vary from business to business. There's no one hard rule for it all.
Perfect. Okay, so I might actually just go back a screen. So up the top of the serviceability calculator image, you can see there's a circle around apply values to serviceability calculator. So make sure you click on that, and then it'll bring the information through, or the numbers through for you, to the main page of the serviceability calculator. So you can see here it's put the add backs and the self-employed income in there for you automatically. Now, whilst we're on this page, I might just confirm or let you know that if you are doing an alt doc loan, you do not complete the self-employed worksheet. So you don't complete the self-employed worksheet for an alt doc loan. You will simply work out what the alt doc income is, and then you manually input it into the self-employed income field. You can click into that box and you can free type information in there, and you would have all of the income bulked into the one figure and popped in that field there. So there's no requirement to do the self-employed worksheet. You just manually input alt doc income into that field there. Okay, so let's go through alternative income verification for residential and commercial. So where can an alt doc loan help? So the most obvious is that the client's not lodged any tax returns. So when the current sustainable income level is not demonstrated in the last 2 years' tax returns, it can definitely simplify the application process for complex business structures when the current income evidence is a better reflection of business performance, and if the business has been trading for less than 2 years. And as mentioned, we do minimum 6 months ABN. So I might throw to you, Andrew, who can use alt doc?
Yeah, basically anyone that's self-employed. If you're structured into the company so that you are a director, if shareholders are receiving income via the trading entity through shares, then that is self-employed. It's basically anything that's not PAYG.
Yeah.
And we would look at our company searches and just determine that that is correct and make sure that it is flowing through. And that percentage that you mentioned, that's where that would flow back to there as well. So you've listed on the page there, sole traders, partnerships, contractors. These are all primary examples of self-employed.
Perfect. And just to reiterate there that obviously it's minimum shareholding of minimum director shareholdership of 25%. is the number that we put in place to deem them self-employed. So if they are 24%, unfortunately they aren't self-employed, and we do treat them as PAYG in that instance.
We still want that loan, just we treat it as PAYG.
Absolutely. We still want the loan, but it'll be PAYG. Okay, so packaging alt doc loan step 1. Can you talk us through the self-employed income declaration form? Obviously, obviously we've got a couple of options now, don't we, with the digital alt doc process as well. Can you talk us through?
Yes, absolutely. I mean, the form itself should be pretty straightforward to fill out in terms of the basics of name of the applicant, the company's name. ABN is very critical. We do check the ABN. There's a online search form to see how long it has been registered. It is very self-explanatory, as said there. The points there, the loan amount, if that changes, then that's not critical. We want to know what is being applied for in the first place. And I think one of the most important things is the income that has been earned and is sustainable moving forward as well. There is a section there for rent and other income outside of that is still earned by that self-employed person. Just have a think if you've got a professional investor. We do see a few of those. A big property portfolio, is that being entered purely as rent, or is it running off a total gross amount, which is what this is intended for?
That's a really good point you make there. We do get a lot of alt doc loans or alt doc scenarios that come into us where the client does just have a special purpose vehicle to hold investments. For us to be able to do alt doc, it must be a trading entity, must have trading income. If it is just a special purpose vehicle, all we need to do is see the rental income statements. If it's a rental property, for example, we don't go any further than that. We just look at the rental income. It's just an investment at that point. Okay, so can you talk us through also what call do we make to the client?
Yeah, absolutely. So where we have a self-employed declaration, we actually want to call that applicant up for a few purposes. One is just to verify what they've got on the form is what they've stated. So we'll ask them, do you recall filling out the form? Do you recall the income that you've declared? We'll ask how long they've been trading for that business. And we really want to make sure they understand the process they've applied for through the alt doc. We go as far as actually talking them through the loan structure, the repayments, the loan term, the interest rate that's applied, just so they have that understanding of it. And we ask a simple question, is that going to cause any foreseeable hardship? Obviously, people aren't going to apply for a loan to put themselves in hardship, but it's a way of just double checking that they do understand what they've filled out and how it flows through to us and how we're assessing it, which will then lead to us funding a property purchase or refinance or that cash out we're talking about.
Perfect.
I should add too, when we're going to talk about accounts later here, but when we go electronically verified alt docs, those calls won't be made. She did preface at the start of this session.
Yeah, I would say there might be some instances where we would still need to make a phone call. I don't think we would completely remove that, but yeah, hopefully we can remove 99% of those phone calls to speed up the process and the callback requests. So packaging alt doc loans. So step 2. So step 1 is all about that self-employed income declaration. It's about making sure the client understands and that they are self-declaring their income. And then we've got 3 supporting document options that back up that client's declaration of income. And the first here is the accountant's letter. The loan amount that we go up to is uniform across commercial and resi. So that's up to 3 mil we can use the accountant's letter for. The accountant must have known the client for the last 12 months and can't be related to the client. The accountant must be listed on the Tax Practitioners Board. It can only be used to reflect profit from the prior financial year, so it cannot be projected income. We do get a lot of accountants and clients wanting to utilise more recent income. If they're looking to use more recent income that is inside the most recent 12 months, we can look at utilising that through business bank statements or the BAS, looking at the most recent 6 months, and then annualising that. So that's pretty much the only type of projection that we would do, is working off actual figures and then annualising that. We'll go into that in a second. If the client also receives wages from the business, this should be included within other information. So that's really important to note. Definitely pop it in that box there, because then it's a tick and flick for us. We can see that the accountant has confirmed that for us. Income can only be used for trading businesses, as I mentioned before, cannot include rent, development income, or sale of assets. And clients can still use the accountant's letter even if the tax returns have been lodged. We do obviously have the 1 year as a full doc option that is available to you through the full doc option in the near prime clear. However, sometimes we do have promos on in the alt doc space in prime alt doc. So the prime alt doc rate might be better than using a near prime clear full doc rate. So we do have both of those options. Absolutely touch base with your RM or your BDM if you do have a 1 year option, because they're always going to be able to point you in the right direction, what is going to be the most cost effective and most beneficial solution for your client at the time. Okay, so again, verification call. We do one to the accountant too.
Yeah, absolutely. Similar to the applicant's self-employed declaration, with the accountant's verification, we'll call the accountant and just check that they recalled actually filling out the form and what they placed on it. We'll ask them if that income is expected to be continuing into the future. And it's really a pretty straightforward call. I find them a lot easier to complete than the self-employed declaration.
Mm-hmm.
And yeah, I mean, the accountants would expect the call as part of the process. It's very straightforward.
And then obviously moving forward with the digital process, we're going to remove that phone call as well.
That's what's happening.
Yeah,
yes.
That's such a time saver. Yeah, I can't stress how much of a time saver this is. I wish I was still a BDM when these changes came into effect, because I would have been super bumped for myself as well.
The other thing too is we've already confirmed that they're on the accounts practitioners board to start with before we make the call, so we know it's a legitimate account that's filled it out in the first place.
Yeah, perfect. And that's the risk, right?
Yes.
Yeah, that we're mitigating. Perfect. Okay, so that's the accountant's letter. The second document option is BAS statements. So the simplest form of alt doc income verification is the BAS. We have a BAS calculator tool, which I'll run through with you in a moment. But we simply look at the last 2 or 4 quarter BAS. Brokers typically provide 4 quarters if there's seasonal or lumpy income. They might have a very low quarter and a very high quarter. Or they could have 2 low quarters, given it might be seasonal, and then it's a better reflection of the income overall, looking at the whole year. We do need the ATO portal BAS, so it can't be pre-lodged BAS to the ATO portal, it needs to be finalised. And wages that are paid to directors can be added back to the serviceability calculator. So as you can see here, we look at the 1A, amount owed to ATO, 1B, amount owed by ATO, G1, the total sales, and W1, total salaries or wages and other payments. So with that W1, it doesn't distinguish between directors' wages and staff wages. So we do need to get an understanding of how much belongs to the director. Now, we do our due diligence. We do look up the companies. We do have a look at how big this company is, how many staff it would take to run the company, and so forth. So if you've got a client who, for example, has alluded to $150,000 in salaries, and they're saying it all belongs to them, none of their staff, and we can see that it's going to take more than one person to run this company, how are they paying their staff? Those are the types of questions that you need to probe your client with to get a deeper understanding of that client's business, so that you can obviously provide us that information as well. Needs to make sense at the end of the day, but absolutely we can allow you to add those wages back to the main serviceability calculator under gross annual income, because it would be a PAYG salary. So see, this is the BAS calculator. Now this is a tab on the serviceability calculator. So with our serviceability calculator, you have the Resi, Commercial, SMSF, and the BAS calc, all on the one calculator, just running on the tabs on the bottom of the spreadsheet. So with this BAS calculator tool here, you can see we've got 2 quarters worth of sales that have been input. Then we've included the 1A, amount owed to ATO, 1B, amount owed by ATO, and if there's any salaries or wages. And then what happens is the calculator reverse engineers the GST paid off the amount owed by the ATO, and it will then calculate the expenses off the back of that as well. It does give you the annualized surplus. As you can see in the total here, we've got 129,000 is the actual surplus, and then annualized out is 258,000. Now, when we get the BAS statements, obviously we're only receiving the most recent 2-quarter BAS, which would have produced, as per this calculation, 129,000. However, if your client confirms that they are actually trading above that in terms of profit, they can self-declare up to 258,000 in terms of what the income is. In terms of the income, we can see here that the BAS is producing. So the client would obviously have to make that self-declaration themselves. You can't complete and say that they're earning 258,000. The client needs to be comfortable with declaring what they're actually earning. So over to you. Were you going to say something?
I was going to say, and this is to tie in with that declaration. So we've made the call, or it's auto verified for the amount that's declared, and we get a couple of BAS to just validate that. And getting back to the key point of what you're talking about, there's only 2 quarters we're looking at here. So if the four quarters supported something different, then we'd go through that as well.
That's right. So here we could rely on up to 258,000 as long as that the client has self-declared that in their self-employed income declaration form. We can see that the BAS is producing that on an annualized basis. That's a tick for us. We can play on. As Andrew just said, if there is 4 quarters, again, it's going to produce a different output, and it'll be an actual output though, won't be a projected, because we'll be working off the actual most recent 4 quarters. So you can have a play, have a look at what works better. As long as that self-employed income declaration is correct and it's come from the client and it all pans out with the BAS calc, we're happy to proceed. Okay, so the last option for self-employed alt doc is business bank statements. So with the BAS, with the bank statements, again, we can actually look at 6 months or 12 months, depending on whether it's seasonal or lumpy income. Within the statements, there is a bit more of due diligence on the client and yourself with these, because you're wanting to go through line by line all of the transactions, make sure what is in this account is actually business related, it's not personal expenditure. You want to make sure and be across if there's any sort of defaults or reversed payments. Does the account go in arrears? Have a look if there's any adverse conduct within those statements. Obviously, you want to put your best foot forward with alt doc. You typically only have one chance to get it right. So make sure you're across what's happening in those statements. And what you'll be looking at doing is adding up all of the expenditure, adding up all of the income, that's the turnover that's coming into the business account. You're simply deducting the expenses from the turnover. Whatever is left is your client's business net profit. Okay, if you've given us 6 months, you times it by 2 to annualize it to give us the 12-month figure. And again, that 12-month figure should align with what the client has self-declared on the self-employed income declaration form.
Just highlight something you touched on there. We often see non-business expenses running through the business bank account. So if you identify that and let us know, then we're happy to extract that from the calculation. It might seem counterintuitive that you've got non-business expenses on a business bank statement. That's between the clients and their accountant. We're just after what is true to that business to be able to run through that assessment.
Can you, this is just throwing an ad hoc question to you. Can you talk us through, so say for example, a lot of the time we have clients who, given the fact that a lot of clients run a lot of their personal expenditure through their business, how do we look at that when we're looking at the HEM? So to put in their personal commitments, their travel, you know, whatever the case might be, and it might look low, and that is because it's being offset in the business. How do we treat that?
I mean, holistically, it's the one-word answer I give you, but you know, we would look through it and just apportion what needs to be apportioned inside and outside of the business. Obviously, we have a HEM benchmark that we look at for expenses. If some of those expenses are flowing through the business, then it's just a matter of the predecessor being comfortable with that and understanding that we are within a ballpark for what you'd expect from the HEM when we look at both sides of it. It's a good question. I think it really is it's case by case when you're looking at different applications, but in general, it's just about identifying it and are we putting it over on the business side or the personal expense side.
Yeah. Okay. Yeah. Because we do see a lot of times where people would be doing a lot of the wrong thing in terms of expensing a lot of things through the business. So obviously we have to put our responsible hat on.
Absolutely. That's why that is between them and their accountant.
Yeah.
You know, we're not here to give advice on where their expenses should be paid for. And you know, we also don't see whether it's being reimbursed or, you know, pick any other scenario. It could be being deducted from their directors' salaries or accounted for some other way.
Yeah. Cool. Very good. Okay. So you would definitely see a lot of applications that could come in packaged a different way for better outcomes. Can you talk us through what are your best practices for a smooth application process?
Yeah, there's some really good tips on this page here, and I won't run through it verbatim and read it all. I think the overarching message is if you see something, explain it. If we see something, we're going to need to have an explanation. We need to have it validated. Is it something unusual that would make us stop and think? At the end of the day, a good application, the ultimate compliment you can give a broker for an application is approved at first touch. And the first call they get is just letting you know we've approved it, we've got some straightforward standard conditions, and you would have already had your conditional approval letter, final approval letter come through your mailbox. So throughout my career, I've used a catchphrase, if you think it, ink it. So if there's something when you're interviewing an applicant, putting an application together and you think, well, what about this? What about that? Ask them the question and then put it down in the application. I've never seen an application with too much information, Samantha.
Yep.
Do occasionally see those that don't have enough information. So don't be afraid to be forthcoming with that information. You know, help sell the story, especially if you're looking at, you know, something that is non-conforming, a specialist type application with an adverse credit history. We want to understand how we're going to improve their situation by approving this finance, and having that story, understanding the life event that may have created a difficult financial situation, give us the comfort that we are able to actually assist this client and move forward with an approval. You know, we're concentrating on self-employed here today. So, you know, what is the history of that applicant in that industry that they've worked in? I've seen applications where you think, yeah, they're self-employed, but they're not very experienced, and they're after, you know, a fairly sizey debt load. Then when you explore a bit further, they've actually worked in that industry for quite some time, maybe even being successful as a PAYG employee in that industry. So good at it, they've decided to go out and start their own business and maybe even compete with their old employer. That kind of story is a type of thing that think it and ink it and give us the explanation will give us more comfort in coming to the right outcome for the client.
Perfect. And I'd probably just say exceptions. If you have, oh my gosh, how many exceptions do we do a day? So many. We are definitely comfortable with operating in the grey as long as we can mitigate the policy that you're looking for us to do an exception on. So if you have something that isn't policy, you know it's not policy, don't just send it up. Make sure you speak to your BDM or your RM pre-submission. It's a process that's within, if you fill out the template in full, the exception template, we will literally get you a yay or a nay within that day. So it's not going to take much time out of the process, but if it does get sent up without an exception that's been approved, obviously it's a bad experience for everybody. So please do reach out to us for exceptions every day of the week. We love them. And also pricing. If we've got competitors out there that are more competitively priced than us, and you want to do business with us, again, reach out to your BDM or your RM, because we're always looking to be able to provide you with another solution here. And if there's something that's stopping us from doing that, please reach out to us because we want to support